This is our Forex blog for January 14th, 2013. I haven't been doing them lately mainly because of the holidays and some other things that I've been working on. I'm going to try to do a short one every day so people can see the tools in action, but we have, Forex video blogs going back over 2 years showing how our software works. So, the main purpose of the blog is to show people, that our software, the systems that we teach, you can see it in action day after day and come up with your own conclusions whether you feel like it will help your trading. This is our new FX trend intensity currency meter, which we released, I believe, early last week, and it shows the intensity of each currency as statistically compared versus all the rest of them. We have the real-time trend on the top, which basically uses, in this case, a 5-minute trend, how far up or down it is on the 5-minute basis. Underneath that, I have the 30-minute trend, daily, weekly, monthly. And in a perfect world, the easiest trends are when, like the euro, the daily, weekly, monthly trend is up. However, for a good part earlier today, there was a lot of weakness, and then it, disappeared, and the longer-term trend kind of slightly re-exerted itself, especially against the yen, which was, as you can see, much clearer, much weaker than the dollar is. The monthly trend's weaker, the weekly trend's weaker, whereas this one is mixed. All right, so let's look at the main trading hours between 3 and about 12. I'm going to click on this button right here, which allows me to move one of the currency meters back, and they'll all move back at the same time. So let's say you started trading around 7. You can see the dollar has some decent amount of strength. The 40 level, I find the trend oftentimes continues. The 80 level almost always continues, as you can see here in the pound. Happened at 5:30, a little bit of a pullback, very little amount of strength. The 30-minute trends down, the daily trends down, the weekly trends down, the monthly trends down, and of course the intense downtrend of the pound continued. These are the best signals to find, but some days you're not given those. So keep in mind with the dollar, the weekly, monthly trends down. We have a little bit more strength in the yen, but the longer term downtrend of the yen is, you have to be aware of what the longer term trend is. A currency can go up 1 to 3 days even though the longer term trend's down, but usually it'll go up for an hour, hour and a half, maybe 3 to 5 hours max. So, from 2 to 7, you can trade this thing to the upside, especially when the 30-minute trend goes positive. But keep in mind that they're going to be likely to be small profits, unless the other currency is super weak and also shares the downtrend on the longer time frame charts. So let's bring up a chart and take a look at the pound yen, pretty much mainly from around 3. The 30-minute trend, or 2, I mean, the 2 o'clock, the 30-minute trend shifted up in the yen. So let's scroll back and look at this at 2 o'clock. You can see that was the currency you want to look for sells. Weak pound, strong yen. We have a nice little multi-hour, and the longer the better. I prefer at least 2+ hours of sideways low volatility rectangle pattern. Breaks out right here. You can see it fell 50 pips, and at that point you really want to wait for a pullback. And there's kind of another multi-hour rectangle pattern here that you could sell. But I prefer, rather than selling the lows or buying the highs, I prefer to get in on pullbacks. So from a 5-minute chart here, we're going to drop down to a 5 pips per bar range chart, and usually 3 to 5 red bar, or in this case green bars, give you a high probability setup. So you have 2 bars up, 1 down, 2 more up. So at that point, from this area right here, it's a pretty decent place to look for a sell, and once it breaks those lows, you can go short. You put your stop right above the highs. You're risking 12 to 15 pips here, and you can see it went down, kind of is going sideways. Anytime that happens, I move my stop down pretty much near break even, and because this was so weak in the pound and the yen was strong, it's very likely to go to the next fib target, which is right here. If it stalls here and goes sideways, you want to exit half and trail the other half. If it breaks through there, typically you want to get out to 1.618 fib target. In this case, that's what I would have probably done, and I would have missed this extra 20 pips here. But you can see it went from 82 down to around 35, It's almost 50 pips. That's a great trade. And if you miss that trade, you have another pullback again right here. And one nice thing I like about range charts is you can also, if you don't want to count the bars, just put on a displaced moving average, and not a normal moving average, but our DSP one. This is using digital signal processing technology. 5-period moving average shift to 3 bars to the right. I'll make this white so it stands out more. And by using this, you can wait for 3 to 5 bars above the moving average as a decent place to sell. So here's the first bar above it, 1, 2, 3. Once it breaks down underneath there, and preferably a close, you go short. So in this case, you would short right here at the close of that bar at 84. And if you want, you can just use this as an entry and exit method. Small profit, you're short again. Small profit, short again. You made about 20 pips there. Short again, you made another 15 pips. Now, one of the strongest of all the currencies on here is the euro, and one of the weakest ones is the yen. Today, the opposite happened. You know, the yen became strong and the euro became slightly weak, but it wasn't quite as weak as the pound. And the pound, you're not fighting a super strong uptrend, so it's much safer. And you can see the trades just worked and worked and worked. The euro is pegged to the Swiss, so, or I should say the Swiss is pegged to the euro, so they pretty much fall in line. The New Zealand was also very strong today, as you can see. Most people don't trade the 4 bottom pairs against the top ones, so I don't have the daily, weekly, monthly, or the 30-minute trend on these. But you can trade the super strong New Zealand today versus the pound. Let's go back to the 5-minute chart. Pound New Zealand also was a good one to be looking for sells earlier. And you can see it's just down, 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 down. The first sell when it breaks the low here. This is a decent pullback, short right here. And you can see that most of the time when you have a super strong, or in this case super weak currency, they're going to work their way to the fib target, either the first fib target or the second one. So if you wait for a little bit of a pullback, as soon as it breaks that bar's low right here, 91.39, you're in, your stop is right above the high. And the real key to trading is small losses, big wins. And a lot of times these super weak ones don't retrace to the 38 or 50 or 61.8% fib targets, or Fibonacci retracements. And so we put in additional fib levels. This one right here is a very decent place to get short or buy a strong currency when you're trading one of the strongest or one of the weakest in this case. So you can see it went pretty much right to that level. It was also the half number. And again, the key to trading is small losses, big wins. You sell it when it breaks that bar's low, put your stop above that bar's high, you know, by a pip or two. And this is your profit that you made on it. And you're never going to have 100% winning trades, but when you're making 5 times, 6 times, 7 times more on your winning trades than losing trades, and that's not going to be every single time, but occasionally even, that's going to average your wins to 1.5 to 2 times bigger average wins than your losses are, and you don't even have to be right half the time. So that's what's nice about using our statistical tools. You're trading the ones that we feel, in my opinion, are the most likely to continue to trend, and especially when you line up as many time frame trends as possible. And they're also more likely to give you bigger wins than, you know, a smaller 5 to 15 pip win. You're going to catch, you know, like this one, 35 pip win. So let's take a look at some of the other ones as we go forward into the day. Let's say during the US session. You can see the weakness in the euro is kind of disappearing, especially right here. The 30-minute trend is mixed. The daily, weekly, monthly is still up. So really you could be looking for some buys here at 10. And, you know, the longer term trend of the yen is weaker than the dollar, but right now the yen is quite a bit stronger. So you might want to have looked earlier in the day about buying the euro versus the dollar. So let's take a look at the euro dollar coming up to 10. This one's kind of hovering near the lows here. We have a nice little low volatility pattern, which oftentimes precedes breakouts, and usually breakouts from these areas tend to continue. This one did, but it took it a couple hours before it really continued. And so you got that breakout right here. You were watching for this, and it went up about 15 pips. you got a pullback trade right here when it goes back above that displaced moving average. A lot of times, the reason I like this digital signal processing displaced moving average is because it tends to happen right where my trend lines would be. I like to buy pullbacks, or in this case, when they break the trend line after 15, 20 pip pullback, breaks it, you get in, you can see it made a high here, wick reversal. A lot of times wicks at the extremes of a swing are good reversal patterns and exit patterns. But you have two nice entries right here, and then at that point you have a nice little kind of flat top. The lows are getting, the volatility is getting smaller and smaller, and when it breaks out right here, you can see a nice explosion. And usually, after any kind of multi-hour pattern, it's going to work its way up to the fib target, or slightly above in this case. So this is one of those cases where you could have bought the 3370 right here, put your stop underneath these lows. You're not even risking 10 pips, and your profit target's 17 pips up. And in this case, it went a little bit beyond that. And you can also, by the way, use a 5 pips per bar chart on this. Or even, I've been scalping a lot of times if I only have half an hour to trade, using 3 pips per bar charts. And what's nice about this is you can use our trend candles to tell you when to get out of the trade. Go to Add Studies, Trend Candles. If you got into that breakout right here, you're out with a small profit. You're in again right here, out with a small profit, in, out with a small, 8 or 10 pip profit. You can also use, this one was kind of, because the market was during the dead time, you didn't get any kind of explosion. But usually when the market's really moving, you're going to get multiple bars in a row pullback on this. You can go to a 5 pips per bar chart as well, and you can see this stayed pretty much green all the way up to that fib target up here.